All right, so lots of news to talk about this week. As you know, we always go new news, then we do the rate update, then we do wins of the week, a little sales tactic, and then we end with Q&A. So jumping into the new news, there is a ton that's happened just over the last couple weeks since our last meeting. The first thing that is top of everybody's mind right now in real estate is the announcement on this was on Thursday by President Trump that he is going to have Fannie Mae and Freddie Mac purchase $200 billion in mortgage-backed securities. Okay, this is huge. Um, the reason that rates were so low over the kind of 2000, let's call it 2013 to 2022 time frame was really because of what they call quantitative easing. Now, quantitative easing is when the government or a government entity comes in and buys mortgage-backed securities. So they're creating a market for mortgage-backed securities, which basically pushes the yields down and the costs down. So that's pushed rates currently to the lowest point they've been in 3 years. However, unfortunately, the way things have worked a lot in the recent history with the White House is we get these statements and then nothing really happens. So we'll see. We'll see exactly what happens on this. I think the market at this point has priced in, the fact that they believe something will happen. They haven't really priced in exactly what's going to happen because they're waiting for details. Okay. So we'll see. Our rate's 5.99. Yes, people can get 5.99 right now. They're definitely moving lower, but I don't think we're going to get this drastic drop that people are still waiting for. I think all news is good news when it comes to interest rates being lower. So I think it's definitely something that you should be sharing out there, social media wise, sharing with your database and that, letting people know that, hey, rates are coming down. Okay. Um, the other thing is this came out 2 weeks ago now, or maybe, yeah, 2 weeks ago. Um, we had the highest existing home sales in the month of November that we've seen in 8 months. Okay. So if you go back to the beginning of last year, you remember that we will have several months where we had multiple offers. So kind of the February, March, April timeframe, we were seeing multiple offers, we were seeing higher bids. Then we ended up with a flood of inventory. The demand kind of shrunk as rates went back up above 7 over the summertime. And then, and so homes kind of sat on the market. Well, that existing home inventory is now getting gobbled up. With rates coming down, I expect that that's going to continue to happen. I'm not saying we're going to be in multiple offers forever, but I do think that if you have buyers right now, they need to act relatively quickly because they could find themselves in a situation where they are no longer able to negotiate rate buy downs, closing costs, that type of thing. So who should benefit from buying right now? Anybody who maybe is struggling to qualify, they need, that lower price, they need a buy down by the seller, that'd be a good person. Anybody who's using a down payment assistance or an FHA loan program, where those sometimes are hard to get accepted in in a normal market because there's other offers, then that would be a good time for them as well. So I would definitely push any buyers you have to start making a move soon. All right. Um, the market doesn't really like volatility. They don't like surprises. Well, this morning, um, President Trump brought charges against Jerome Powell. So the charges stem from a overrunning cost of the remodel of the Fed building. It has nothing to do with anything that he's done that's wrong or anything like that. I think basically what this is um, kind of retaliation for Jerome Powell not really doing what Donald Trump wants him to do. So I think it'll be much ado about nothing, but we're already seeing rates kind of move up off of the Friday lows. So we'll see how that shakes out. But the market doesn't like surprises and doesn't like volatility and things to be like this. Chaos is a better word for it. So we'll see. Also, at the same time, we have conflicts going on in Venezuela. We have a potential conflict in Iran. So the market definitely reacts negatively to those types of things. So we'll see how that plays out in the coming months. But I definitely think I know I talked to a lot of people over the weekend because rates dropped on Friday, and a lot of people think that rates are going to continue to go down. Um, I'm starting to question whether or not that's really going to happen. If how if it does go down further, how much? So we'll see how all these things play out. Okay. Um, Weakening jobs. So as we've talked about before, the jobs market and the jobs reports that come out monthly and the inflation reports are really what determine whether the Fed is going to cut again in the near future. So on Friday, we got a jobs report. It was kind of muted because of all this talk about the Fannie Mae and Freddie Mac buying $200 billion in mortgage-backed securities. So the jobs report kind of fell down to the bottom of the page, but it came in lower than expected. So we added 50,000 jobs in December versus 60,000 expected. So we'll see how that continues into the coming months. Um, and then on top of that, we get our first CPI report that we've gotten really that's going to have all the data. That's the December CPI report. So that would be after the government shutdown. That'll be the first report we've gotten since that government shutdown that should show the data the way we want to see it. Core PCE is currently, or core CPI is currently at 2.63. A lot of expectations are that it's going to be flat. Flat would probably be okay. We don't want to see a spike, is what we don't want to see. Okay. So remember, the Fed looks at jobs and they look at inflation, and that helps them determine when they're going to cut rates. Any questions about the news? Okay, moving on. Now we get into the rates. So I already told you where rates are, or where rates were. They were 5.99, which is the first time they've been below 6 in 3 years. So that's a huge win for real estate, for mortgage people. It's a huge win for our clients. I know there's a lot of folks that are sitting out there with rates around 7% that we haven't been able to refinance yet. So we're going to get another wave of refinancing of those folks to be able to save them money and hopefully, you know, be able to make their life a little easier and also be able to maybe, pay their loan down faster, all those things. So this is today. So the 30-year fix jumped back up slightly, but it's still 6.01, so everything's looking great. FHA and VA are down here in this lower corner. So both of those loans now are below 6%, and they've been heading that direction, and they're pretty firmly below 6% now. So if you do have anybody who's a veteran or anybody who is looking to take out an FHA loan, those could be good options for them as well. And then obviously the 15-year is usually around 0.5% below the 30-year, and so that's around 5.5 right now too. This is the mortgage-backed securities chart. The reason I normally don't print this and show this one, the reason I'm showing it today is because I wanted to show you what happened on Friday. Okay, so if we zoom in over here on the kind of the right-hand side these last 2 days, you will see what the mortgage-backed securities market did on Friday. It shot way up, which is good. Up on the mortgage-backed securities market is good. Shot way up. That's when we were getting those readings a little bit below 6, and then it came back down and settled in right here, and that's exactly where we're at today. So Sue, thanks for jumping on. I saw you just joined. So today's rate was 6.01. So there's some flexibility right now, some fluctuations, based on all the things coming out in the news. But I don't think that this is going to cause a straight down trend. I think that rates have come down. We're in a better position right now than we have been. This is a 3 month chart. And so this is a pretty tight range for the mortgage-backed securities market. We had topped out at this line right here, kind of we had topped out there, and that line was holding support on Thursday. And then if you go all the way back here into October, that was the support line as well. And then we kind of fluctuate down, but never really got above that. So this action on Friday could create another channel where we're just slightly lower. So instead of being in the 6.1, 6.2 range, we're maybe in the 6% range, plus or minus a little bit for the coming months. I just don't know if we're going to see 5.5 or anything like that anytime soon. Okay. This is the 10-year Treasury. So 10-year Treasury, same thing. It's in a pretty tight range right here. It did dip down. So we did get towards the Thanksgiving holiday. We got a little dip there. And then we had another one back here in October. So this one, we're looking for it to come down. So we're really kind of in the same spot here as we were on Friday. We would like to have this come down, but there's some definitely every time there's one of these lines here, these are levels of support. And so it's hard to break above or below these sometimes. Okay. Now, this is the rate probability chart. So if you were on our last meeting, which was in the middle of December, the probability of a cut in January was 25%. It's now 5%. So the market is not betting that the Fed is going to cut more, right? Jerome Powell's still in charge until May. He's currently kind of fighting with the administration. So I'm guessing that this action that happened today of the lawsuit or investigation filed against him is going to have some Fed governors having pause, really wanting to support the current administration, because the concern is that if you are going to go after somebody legally, then that creates a lack of independence from the Fed. And the Fed, all of the governors, when they talk, they always talk about Fed independence and having the importance of that, so that they can work, based off the data rather than political motives. Okay, so that's why that's kind of an issue today. All right. Let's see. Wins of the week. Does anybody have a win of the week they want to share? My win is this is my first day back in the office for the year. So that's a win for me.
Same here, Greg.
Yeah, that's good.
I don't know if it's a win, but
hey, it's a win.
I'm here.
It's a win. I like it. Jesse, you have a win?
I have a win. So it was like inspired after the holiday party last week. I was just like talking with other loan officers. We were talking about how to be more productive. And so I used the phone burner website for the first time on Friday. I made like 45 consecutive outbound calls. And then I got the idea to start using the Reach app. And so I sent like 132 texts. And it was
Awesome.
amazing. That just like gives some really good momentum going into the year, because the whole point is to get more efficient with our practices.
Yep.
And like find ways to kind of like expand our reach. So that was a win.
That's
I was
awesome.
Like, super excited for that.
I love it. So if you don't know what Jesse's referring to, and Jesse, by the way, is he's not a newer loan officer to us. He's a newer loan officer in our branch with Movement. So he's in our branch as well. And Jesse is talking about two softwares that can help you make your calls. So the first one is Phone Burner. And the way it works is you load all of the numbers that you want to call, and you log on to the website. Maybe you have a headset on or something like that, and it calls. And if the client doesn't pick up, then it has a pre-recorded message that it leaves. So it could say, like for you, Sue, it could say, hey, it's Sue just calling to, check in on you after the holidays and wanted to let you know what's going on in the market. Give me a call back when you get a chance. Something very similar. So it doesn't have to be like specific to a person, right? So you can customize it, but you can also just have it pre-recorded. And then it leaves that message and immediately starts dialing the next person.
Wow.
So it's very efficient if you're going to sit down and make like 30 or 40 calls or something in a day. You can get it done faster that way.
Yeah, I think it took like less than an hour to make 50 calls, and that was after talking with, I think like maybe like 12 people answered. So that's like
Awesome.
with live phone calls in there. But it just eliminates the pause in between because sometimes we'll get the anxiety before we call somebody.
Yeah.
But that's actually what was taking up the bulk of the time during those hours of making the calls. And so it just eliminates that.
Yep. No, it's a great software. And then also Reach was the other one that Jesse mentioned. And Reach is a text app where you can load in all of the contacts that you want and you can create groups. So you could say, these are all my potential listings, people who've reached out and said they wanted a list. You could say, these are all my buyer clients, whatever. And you can create a text and you can send it out to everybody. So sometimes I will do that. If you're going to do that, just be careful because sometimes people get upset if they feel like they're being spammed by texting. So, but it is something that makes it very efficient, for sure.
Ask a question about Reach.
Yeah.
So if you're setting up this group text, are the recipients seeing that they're in a group, or
No.
does it come to them as an individual?
Nope.
Okay.
It comes them from. So the one thing with Reach that is better is it comes from your number. The downside is that you have to. What will happen is if you have 50 people in this list, you have to hit send, and then you have to hit the send button every single time. They pop up, you hit send. Pop up, you hit send. Okay, it's fine. I've done it before. I was sending when I was doing just kind of a broadcast to everybody, like 250, and it took me probably a half an hour to hit send every time. So yeah, not bad. A good one, Jesse. Good share there. Okay, moving on to our sales tactic. So, what is everybody doing this weekend?
I don't know yet.
Yes, you do.
Watching football.
You're watching football. You're watching the Seahawks. That's what everybody's doing this week is we're watching the Seahawks game. Okay. So, it's been a while. It's been actually before COVID since the Seahawks were really competitive. Okay. So what everybody forgets, I think, is that people in our area, the activity doesn't start until the Seahawks are out of the playoffs. So the years we went to the Super Bowl, activity was the lowest that it had been than from the previous years in January and February. Because people are having tailgate parties, they're going to people's houses, they might be going to the game since they're in town. They don't want to get their house on the market. They don't have to worry about all that stuff right now. They don't want to go out and look at homes. That doesn't mean everybody. It just means that there's more people who are going to be focused on this game right now. Where we have this game, when we win this game, then we have the NFC Championship. When we win that game, we go to the Super Bowl. Okay? So it's possible that we will be a very Seahawks-focused city for the next 3 to 4 weeks. I'm hoping. Fingers crossed. Right? So why is this a sales tactic? Well, your clientele is going to be focused on the Seahawks game. The one thing we know is that even people who don't really watch football all that much, when the playoffs happen and the Seahawks are competitive, they start watching. So, share your experiences around that. if you're at a football watching party, share the experience that, oh hey, I'm at this party and watch the Seahawks go Hawks. Share the game time. Like this thing that I shared right here, I just went on the Seahawks website and I just pulled it down and downloaded it. And it just gives the date. But the next thing that'll come out today, probably after, well, it'll be tonight or tomorrow morning because there's still one game that has to be played this afternoon. Then they'll share the day and the time. And so that's something you can share in your stories. Right? You can also put like something like this, a graphic up like this, and then put a little question, Seahawks or 49ers, right? And see how many people you have choose each. And then the next day, once you're done with that, you can follow up and say, oh, look at all these 49er or look at all these Seahawks answers, go Seahawks, whatever, right? You're just trying to get people to look at your story, right? And engage. So I think that's going to be a big focus right now. There might, yeah, I mean, the activity might be a little muted. We'll see. It's been so far since the 6th, which was, wait, was the 6th? 5th. The 5th was last Monday. So kind of everybody got out of the holiday week there. Since the 5th, it has been pretty active. So I have seen people calling, getting the ball rolling, all that. But a lot of those people I know are not really out looking at homes yet. So I think they're just doing the New Year's resolution thing, and then they're waiting for to see what happens here with the Seahawks. Okay, so now we're down to question and answer. Does anybody have any questions? Nothing? Okay. There's a lot going on. The positive news about rates is going to help us. I think it's just getting out there and finding those people that can take advantage. Like I said, the people that should be looking right now are folks who are first-time buyers. They might want their closing costs paid for. They might want a buy down paid for. If they're in a down payment assistance program or an FHA program that's harder to get accepted, VA even during a competitive market, now's the time. I think that we will see inventory get gobbled up over this year. And I don't know, depending on what happens with rates, I don't know how long this kind of quote buyer's market is going to be around. We could easily flip flop back. It was just this time last year. So I think before you jumped on, Sue, I had shared one of the things I shared was existing home sales were at an 8-month high for November. So, yeah. So that just shows right there that the rates are impacting people's activity. Okay.
Greg, for
Yeah.
our realtors and any clients, any possible leads, like for like open house flyers, can we quote 5.99?
Yeah, let's talk about that offline. It depends on what program you're looking at, but remember we have FHA at 7.5, or sorry, not sorry, I said 7.5, 5.75. That's what I meant.
7.5.
And then VA at 5.75 now too. So
7.5.
yeah, let's talk. We can talk about that offline, and I can show you some tactics there too. But
Okay,
absolutely,
okay.
absolutely. I know there's been a lot of people doing open houses online. I see on social media, so I think everybody's getting excited. We'll see if we can carry some momentum throughout the rest of this year.
Yes, sir. Thank
Okay, you're welcome. I appreciate you all
Thank
jumping
you.
on. We'll talk to you next time.
you. Talk next
Bye-bye.
time.
Bye, guys.
Thank you.
Yep. Bye.